Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, Hurricane Irma has left a trail of devastation, really, especially in the Florida Keys, and we are still going through the recovery process here in Florida. And so I'm running off of generator power right now because we lost our power on the 10th of September. And the authorities are telling us it could be weeks, and in some places it could be months before we get our power back. So it's going to be a long road, but I'm very optimistic that Florida and Texas are going to bounce back better than ever. And that usually happens, actually, when there's a state of emergency declared in a state. Federal money comes in through FEMA. The rebuilding process takes place, and again, a lot of folks wind up better than they were before the hurricane. I know that sounds crazy, but when Hurricane Hermine came by last year in Cedar Key, it flooded the whole town. We were 4 feet underwater, and we've rebuilt from that, and it's like a brand new little town. So it's attracting tourists. The businesses are flourishing, and on Monday we're having an open house Q&A session. And what I'm going to do on Monday, and I'll give you the details towards the end, I'm going to go over stocks and industries that would be affected both negatively and positively to a hurricane and different weather cycles, so you don't want to miss that one. I'm not going to give recommendations. I save that for our Trade Alert members, but I will be putting out some trades next week that will go along with some of those companies that are benefiting from the federal money that's coming in. So again, that's going to be Monday the 18th at 8 p.m., and I'll give you the link towards the end. Well, this is the diamonds. This is the Dow Jones Industrial Average ETF, and I've left my lines in place again so you can see how well the forecast went from last week. And so this was the diagonal line that I drew last Friday. I said that we would rally. That's exactly what we did. I drew this as a gap fill resistance, but as you can see here on the 11th, this was as Irma was coming through, the diamonds broke out over this resistance, continued to rally, and so we have a higher volume down here. So right now, this tells me, I'm going to erase all lines, this tells me that increase in volume tells me that we could actually go a little bit higher. And I say a little bit because we have 1, 2, 3, 4, 5, 6 green candles in a row, and that is called a stale green light. But the increase in volume tells me we're going to go a little higher, and then I think we're going to come back to fill some of these gaps. We have a little tiny gap right here. We have another significant gap down here. And gaps, if you follow along with my gap trading strategies, gaps actually act as price magnets. So in the beginning of the week, I think we're going to rally, but towards the end of the week, I think we're going to pull back. So that's for the diamonds. Now the Russell 2000, which is a more broad-based index, this came down last week, and what I did here, if you follow along each and every week, I extended this line. What I did is I forecasted the 20-period moving average, and I said that that moving average would start moving up, and that's exactly what happened. So interestingly enough, for the Russell 2000, we have a fairly good, strong candle here today on the close from the 15th. So the Russell 2000, I think, is also going to rally up, maybe a little bit more than the diamonds, but that's going to be my target as we test this resistance up around the 1460 level right there. So there's my resistance. This is what I think is going to happen for the Russell. But again, look at this wide divergence from the moving average. This is called the rubber band effect. After the Russell rallies, I do think that it's going to get pulled back or drawn back towards that moving average because this divergence is quite wide, and the Russell 2000 does not like to stay that far above or even below that moving average. So keep an eye on that. Now the spiders, ticker symbol SPY, This is the S&P 500 ETF, and it reacted exactly as I forecasted. I said it would most likely bounce off of the 20-period moving average and go higher. It absolutely did that. Again, follow along each and every week. My forecasts are the most accurate in the world, and I record these, I archive these, and it's for your benefit. So I'm going to erase all of these lines and draw your attention to this gap down here. You see this gap? That is going to act as a support level, and then you have a gap above the market that will draw the price back up. Interesting, isn't that? So we have a green candle today on the 15th. Although the market gapped down, we have a green candle. And what I think is going to happen, because we have a stronger volume bar down there, I think that the spiders can go up to fill that gap, and then it'll start coming down to fill the gap on the bottom. And that is really this gap here, when the market is caught between two gaps. Eventually both gaps fill, again 80% of the time I should say, and we could trade against those gaps as a strategy that is fairly reliable. Now if we look at the Qs, QQQ, this is the NASDAQ market. Again, my forecast was 100% accurate, where I said the market would bounce off of that 20-period moving average. I even went so far to highlight and forecast what I thought the 20-period moving average would do. You see this little red line right there? That is the direction that I said the 20-period moving average would move, and it did exactly that. And interestingly enough, for the Qs, we closed today with a bullish engulfing pattern, and on Wednesday we had a bullish engulfing pattern. So this tells us that the buyers are coming in to the tech sector, and what I'm going to do here is, again, race all lines. I'm going to forecast that the NASDAQ is going to go a little bit higher, just like the rest of the markets, maybe set a new high, and then pull back. Reason being is that we have a bullish engulfing pattern on 20% higher volume from Thursday. So that right there tells us the buyers are coming in. So keep an eye on the Qs. Now I haven't forecasted the VIX in a while because it ran out of time. I spent a lot of time on the other major markets, and I think it's time that we talk a little bit more about the VIX. There's a support level down here right around 9.5. And you can see that these are a long stretch of red candles. I think the VIX could actually go down to test that support and then bounce from there, because there is a gap above the market on the VIX. Now, I have been 100% accurate on forecasting the gap fill points on the VIX, and I will once again stake my reputation on the fact that that gap right there will eventually fill. So once that gap fills, we'll put that as a target, the price of the VIX could actually pull back a little bit, because 80% of the time a gap fills, and then 80% of the time after it fills, it reverses, just like we see here. See, the VIX gapped up, came back down to fill the gap. Again, 80% chance it does that, and I still think it's going to go a little bit lower and then reverse, because again, 80% of the time it will do that. Now again, on Monday, as I mentioned, we're having an open house Q&A session. Just go to the Market Guys front page, scroll down, and you'll see the registration link for that event from 8 p.m. to 9 p.m. Eastern. Just click on that link. It'll bring you to the registration page, and then you could put your information in there. It'll send you a reminder. Just click register, and you've saved your seat. Again, this is a free event. I would encourage you to share this link with anyone who's interested in the markets and making money. And we have a good action-packed hour from 8 to 9 where we not only analyze your stocks, but we answer questions. And again, like I said, what I'm going to do is talk about the sectors that benefit from hurricanes and those that do not benefit from those storms. So I'm looking forward to speaking with you on Monday. Have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.